Hi, welcome back to the channel. In this month's March 2026 stock market outlook, I'm going to walk through another really high level, broader market overview of the US stock market. I'll probably spend around 5-10 minutes just walking through all of the broader US market indexes, and as usual I've got around 20 of my best individual stock charts for your watch lists going into March. Hopefully the Scottish accent isn't too difficult to understand, but it has taken around 20 hours to prepare, present, edit and upload, so I do hope you find a lot of value from my hard work. If you follow me closely on X or StockTwits, hopefully my charts have helped you to navigate the last few weeks. Now, for disclosure, myself or my clients may hold positions in some of the names mentioned, but I have highlighted the disclosures on the charts. I think most of you know by now that I don't use any magical hindsight indicators with my work. I timestamp absolutely everything, which is hugely important for the field in which I work. I'm one of the very few who do go on the record with their work. But before I get into it, if you are new to the channel, if you're new to my work, just to be absolutely clear, I'm neither a perma bull or a perma bear. I simply just analyse the charts and the data as it comes in, and I draw logical conclusions using my own work. I've got a lot of really great charts prepped for you today, so if you are a trader, an investor, a money manager, or a financial advisor, you'll probably find a lot of value over the next 30 minutes. But please, as always, pause the video. Very, very important disclaimer. And also, don't forget to please smash the like button, share and subscribe. It really does help with the YouTube algorithm and really does help to get my work a bit more noticed. But one thing to say before we get into this, as we're in the middle of earnings season, I do get asked a lot about some rules that you can implement. So I've just popped a graphic up on your screen. One of the rules that I like to use and I help my clients with is to only consider holding through an earnings report if you have a minimum of 10% profit in the position. It really does help to protect against the holy shit, it's collapsed overnight nightmare that I think we're all trying to avoid. But where I want to just start with the month is just get into, I think, a couple of quick data points. As we can see, there's been a massive underperformance from the triple Qs and the S&P 500, whereas across the board, equal weight S&P, which is more of a cyclical theme, we've got mid caps up 4%, the NYSE composite, which I have that chart prepped in a couple of minutes. I think that's the best chart for the current market environment to use for market direction. There has been a bit of a spike in the VIX this week. Cryptocurrencies continue to be a bit of a disaster at the moment. I know there's plenty of folks are looking at it from a buy the dip perspective. China again falling off a cliff this month, down nearly 12% as well. But I think that the data point that I think shows what's actually been happening in the market, if you only use the S&P 500 or you only use the triple Qs, if you're paying attention to a lot of the social media folks with their S&P charts and their Qs charts, this is the data that actually matters. This is what's actually happened under the surface of the market. Massive performance last month right across the board, with energy up 11.5% equal weight, utilities, materials, staples. The only areas that have lagged have been really technology and financials. Everything else, if you have been looking at the market from a cyclicals perspective, then I'm sure you've done pretty well. But coming into coming into March, we are coming into 2 months of the year where traditionally it's a little bit more positive. For those of you that are wondering why the market was down last month, February is one of the 2 months of the year where there is a negative expectancy. So we've followed seasonality. I think for February, the hope is that March and April will be a little bit more constructive if we are looking at the indexes. But what I will say as well is that we do have potential conflict on the horizon with Iran, etc. I'm sure we're all seeing the news headlines. So we're going to have to navigate that, I think, at some point. But for the time being, just looking at the charts, using the charts for risk management makes a lot of sense. For those of you that have followed the channel for a while, you'll know that this is my longer term S&P 500 outlook. As long as we're above these levels, I've got no problem with looking at the market from a bullish perspective, trying to identify the individual sectors, the individual stocks. But I did say at the start that the NYSE composite, I think, is probably the best gauge of market direction at the moment. We've been in a massive uptrend for the last few months. Very, very happy with it. Again, over the last month, more stocks. This is the NYSE breadth advanced decline. So more stocks are going up as well within the NYSE composite. Whereas, again, the S&P 500 has just been chopping about sideways over the last 4 months. Again, if you're only fixated on the S&P 500, I understand why. But again, supportive breadth as well. We've had more stocks going up over the last 4 weeks. So it's really just been more about finding the best stocks in the best sectors. That's certainly the work that I've been communicating with our clients over the last couple of months. You can't really use the S&P or the Qs at the moment for anything. They're just chopping about sideways. The Russell 3000, however, again, very, very close to potentially breaking out to new all-time highs. The Dow Jones, which I actually think is a good chart to use at the moment, maybe from a risk management, get defensive perspective. If we do start to see more negative news headlines and we start to kind of break below key levels and we put in, I think, failed breakouts in major indexes, then that's a big problem for me, especially looking at the market from a bullish perspective. It's very, very key to understand when the market is maybe not as bullish as what you think it is. So yes, I am bullish. I am looking for bullish positioning. I am looking for bullish setups. But if we start to put in failed breakouts in indexes like the Dow, then I will pivot that thesis on 30 seconds notice, and it would be a risk management game. But as long as the Dow's above these 480 levels, I don't have a problem. The Russell 2000 is chopping about sideways at the moment. This is a longer term outlook that I've built out here for the chart. It's just chopping about sideways again. The message that I've had to my clients over the last few weeks is you can't really use the indexes for much at the moment. The micro caps, it's exactly the same message, met upside targets, and again we've been chopping about the index level for the last month. The VIX, if there's one chart that I would encourage you to maybe replicate for your own system, a very, very basic chart for the VIX. If you're in the buy zone, under VIX under 20, you've got to be looking for stocks to buy. If you're above 20 and under 30, bat signals, observe a little bit more. Obviously above 30, forget it. I mean, a massive buy signal for capitulation. It's timed every major market bottom. As soon as you get that spike above 50, that's when you get the markets in turmoil headlines, and that's when you should be looking to buy capitulation. But the VIX, we're still hovering around 20 at the moment, so don't have any major issues unless, of course, negative news headlines, etc. Now that brings me into precious metals before I get into the individual stocks. Again, longer term outlook for gold. I think the macro thesis is still there. I think, yes, we did have a big pullback over the last few weeks, but that dip has absolutely been bought up. So again, no problems at all for the time being with gold. Again, a lot of our clients have been buying up dips in gold, not just gold, silver. This is the ETF chart. It always amazes me that Fibonacci extension levels have so much merit. Again, a lot of our clients actually cashed in at the highs, and of course the dip has been bought up. So again, just for clarity and disclosure, silver has been one of our recommended ETF buys over the last few weeks to buy the dip, using these lows as a risk management level. And of course, we are starting to move higher again from here. And again, it really plays into the kind of macro thesis that I think we all see. Now, big tech, obviously I've been talking about the sideways range that we've had in the Qs in the S&P. I am starting to kind of loosely work with a thesis that we might start to see some kind of rotation back into technology soon. Now, what that means for me, and you know, if you're, you know, looking for the thoughts of a tier one analyst, one of the things that we'll say to you is that you'll never get the absolute bottom in anything really. But if you can anticipate a potential rotation, it just means that you can then start to kind of look at the individual stocks from a loose bullish perspective. Obviously, if you're dollar cost averaging, etc., you know, you're working for a fund, fine. You know, just buy the dip and, you know, keep buying the dip until you're higher again. But for those of us that are kind of looking to time it a little bit better, I am looking at this, the EV/WAP levels from the April 2025 lows. We are starting to kind of loosely look at the likes, and I have a few of them prepped as well. I'll just add that for you today. I do have a few mega cap tech names prepped. But I am now starting to kind of look at buy low, sell high in some of the big tech names. Obviously, software has been the one area of the market that I think everybody has just been caught completely off guard with. The drawdown levels, it's down nearly 35% from its recent highs. Now, that's actually exceeded the drawdown from the 2025 crash. Now, if you do follow me on X, you'll know that I posted this chart the other day, just basically saying that it's reasonable, I think, to expect some kind of relief rally at these levels. We've had that over the last few days, but whether or not it's an absolute bottom is a little bit of a guesswork. So for me, one of the things that I like to do, and obviously what I help my clients with, is to just kind of look for a potential base breakout on individual stocks. I'm not looking to time absolute bottoms unless there's a very obvious capitulation signal. So that's just maybe something to consider as well. Obviously looking now for technical setups on individual stocks within IGV, but if you are someone who is looking to time individual stocks, then you can technically, I think, buy IGV down here, but you do need to define the risk, I think, against those April 2025 lows as the chart shows. Now, I am about to rip into around 20 individual stock ideas for your watch lists. If you're still here, it tells me that you're getting a lot of value from my work. So again, please do smash the like button. Like I said, it really does help YouTube algorithm world. Now, one of the charts that has had a lot of attention over the last couple of days, again, Netflix now. Again, just going back to what I was saying about, you know, using, you know, levels to manage risk against, that's exactly what we've had with Netflix. It's ripped higher out the gate. It's one of actually our current high conviction ideas, and it's doing very, very well. I think if you've missed the lows, I think this level here around 103 will be pivotal. Basically, what my message to my clients this weekend is, if you're in it for, you know, shorter term duration, obviously, you know, very, very lucky over the last couple of days with the reaction that we've had to kind of like the Warner Paramount thing. But this 103 level will be pivotal. If it can break above that, then with the buybacks, etc., that they've announced, then previous all-time highs, I think, come into play. So if you have bought the lows here, massive congrats to everybody. It's working out very, very well, and hope to see it break out again above 103 over the next week or two. Again, one of the charts, Nvidia, looking at it from a potential buy low perspective. I think we've had earnings, they report earnings like they always do, blowout quarter, etc. The market sold off. I think mega cap tech in general didn't react too well, which is obviously quite frustrating. But for me, this is a Fibonacci chart. I think you can use the AVWAP levels as well from the April lows. But for me, I think if this level holds up, then again, I think it favours the long position. You can buy low, sell high. But if we do start to break below these levels, then there's probably a bigger problem that we're dealing with technology, the market, the macro environment, etc. So I do definitely want to see this 175 level hold up for Nvidia. But energy, if you picked up my work last month, you'll know that energy was the big theme that I was working with. And that's absolutely played out to a T. Monster breakout this month in energy. Again, what does that say about the macro environment in the Middle East? Obviously, oil markets are motoring to the upside as well. So again, I think energy is one of the low-hanging fruit. It has been terrific over the last month. ExxonMobil has been one of the plays. I think as long as we're above these levels at 130, again, I think it favours a long position there for ExxonMobil. Taiwan Semiconductors is the one, I guess, area of tech, the one company that I think is probably bucking the trend a little bit, gone out at new closing weekly all-time highs again. I have been covering this chart on the channel for a few months, and it continues to move higher. The upside target that we're working with here is still up around 421. Another one that I'm watching closely at the moment is TeraWulf. Obviously, I touched on the IGV software chart a few minutes ago. TeraWulf is the top performing component of that ETF at this moment in time. It's very, very close to potentially getting a breakout there. We did have earnings this week, which, just looking at it from, I guess, a neutral position, the earnings didn't really, float my boat, as I would say here in Scotland. But if it does confirm a breakout, then I'd probably still be leaning, for a bullish position in it. There's obviously a massive short interest in it also, which could fuel it. But we're going to have to see how the earnings reaction is over the next couple of trading sessions. If it breaks out, great, but a little bit of selling pressure today. I think it was down around 6, 7, 8% at one point. Not great. Still positive on the week, let me just add that. But very, very disappointing to see it fall away on the back of earnings. So, I think it's a 50-50 for next week, but I am looking at it potentially if it can confirm that breakout. Now, again, another one of those charts where just looking to use recent lows for risk management purposes. Again, I'm not expecting everybody here to kind of take the time with charts to figure out what works, what doesn't work. That's why professionals exist. But the 20-month moving average, one of the things I look for is, especially in top companies, is what I would call the technical deep value play. I'd probably put Shopify in the kind of same category. The 20-month moving average historically has been a decent spot to maybe nibble a little bit, buying dips. It's worked beautifully multiple times over the last few years. So you can use recent lows for a potential stop loss. And obviously there's big upside perspective there. And just to kind of show you what I mean by the kind of the technical deep value play, is that the 50-month moving average is actually a really excellent tool, especially on top companies that have been around the block a little bit. Obviously they pull back every now and again, but if you look at something like Caterpillar, dating back to 2017, the 50-month moving average has been an absolute gold mine if you know about it. Obviously, not every chart has the same tools. You have to figure out what works and what doesn't work for each individual chart, which is the frustration, especially when I look around social media and I see a lot of analysts that are maybe a little bit lazy. But this is just a really good example of a technical deep value play, just using the 50-month moving average. And then you can use the 50-day moving average for risk management purposes. This has been one of our plays. It's been in our Trade Ideas chart book now for nearly 12 months, and it just continues to perform now. I would never advocate buying it up here, but I just wanted to kind of point out, just because I was talking about the deep value. Targa Resources, again, going into kind of the utilities, gas distribution. Monster is doing really, really great things so far this year. Looks like it's potentially breaking out again. Very reasonable valuation. Obviously, a market cap could have some runway there to go as well. Now, commodities is very, very interesting to me, just across the board. I think the DBC ETF could potentially get quite interesting. There's obviously decent upside there as well. If we can kind of get back to previous highs, then there's obviously a massive number there. But I think as long as you're above those AVWAP levels from the 2022 highs, and I think you can go long. AMD's pulled back to its 40-week moving average. I think some of you might prefer the 200-day moving average. I'm hoping that this will act as some kind of support level for the stock. I think a lot of us probably like AMD. Not sure what they're doing at the moment with a couple of decisions that they've made about giving away equity and stuff. But on watch, if we start to break below these support levels, then there's probably a bigger question mark, I think, to be had. But I think if that 190 level can hold up, then I think you're fair game to the long side. Below those levels, I'd have near-term question marks on it. Texas Pacific Land Corp, again, it's one of our current high conviction ideas. I have been posting this to social media. I've been all over this one way back. I posted this even, I think, to Stock Twits and X, just basically highlighting that, again, one of the deep value plays. I'll see if I can find the graphic and pop it on your screen for you. But it's broken out. It's consolidating nicely. The target that we're working with there is up around 590. I think there's a potential for a tradable bottom there for Ferrari as well. I think as long as you're above these, again, just to reiterate, and I really should add it to the chart, I think as long as we don't take out those recent lows, then I think, again, I think you're absolutely fine. I'd like to see that kind of 350 level act as a level of support. So potentially Ferrari might make some sense. Again, Iridium Communications, again, another one of our high conviction ideas so far in 2026. Doing very, very well. I am hopeful that we are just kind of consolidating nicely. And it looks potentially like it might be some kind of bull flag if you're into chart patterns. Then potentially that could be one to look at as well. Now, I did have some questions on Cameco Corp after my analysis last month. If you picked up last month's analysis, I was just basically saying that's target met for Cameco Corp. This is a level to expect some kind of digestion of gains. That's exactly what we've had. For me, it doesn't mean that you need to go selling Cameco Corp if you've got a longer term outlook, etc. No problem. But for me, it does need to kind of take out that 135 level. If it does that, then it brings in 218. But this is a logical pause level for the stock. For those of you that do value technical analysis, these are just Fibonacci levels. Again, if they've had merit in the past, it's reasonable to expect that they have merit in the future. That's what we're seeing at the moment, unfortunately. But doesn't mean that I'm bearish on Cameco Corp. I think you still remain bullish, but it's just a logical pause level for the time being. Target report earnings next week, so I think this is one to perhaps add to your watch lists to consider post earnings. Again, it's one of those names. Nailed the exact bottom in this one for our clients a couple of months ago, doing very, very well. Hopefully there's a positive earnings reaction to this one next week. FTAI Aviation, again, Fibonacci levels, don't know why they work, they just do. So again, it looks like it's potentially trying to break out again, and if the market plays ball, and as long as the market doesn't shit the bed, then I think up around 450 would be a level. I know chemical names, industrial names, etc., maybe not what everyone's looking for, but these are the names that are working at the moment, unfortunately. Again, reasonable valuations, reasonable PE ratios, market caps, breaking out. I think they've just reported positive earnings. So again, obviously there's massive upside here. This is a multi-month outlook. Just to reiterate, this isn't a name that I'd expect a momentum move in it, but you know, could I see it getting to $14? Yeah, I could see it getting to $14. But if we do start to kind of break below these levels, then again, that's a problem. So always have some kind of risk management process in place. Now, my work got a lot of attention last month because, you know, again, if you follow the channel, last month, throughout this whole downtrend, basically just saying that it's reasonable to expect a bounce at 100. Now, lo and behold, we got exactly that. It ripped 35-40%, and it's just been stalling with Bitcoin over the last few weeks. So what I would say is, if you did buy the chart based on last month's analysis, I think congrats, number one, but it's obviously going to move with Bitcoin. Very, very difficult, as I said, to have massive conviction, I think, in the current climate. But if you have bought the lows there, then that's the level to manage risk against. There's obviously huge upside if cryptocurrency can kind of get its ass back in gear. But at the moment, it's had a 75% drawdown. It's had a bit of a rebound. I'm just not sure whether or not this is just a bit of a dead cat bounce before another leg lower, or whether or not it's the absolute bottom. So my message would just be, use these levels, I think, as risk management. One Oak, again, tradable bottom there. I think as long as you're above that 76 level, then again, I think it's fair game. We've got Tower Semiconductors. Again, one of those names that I think goes under the radar. It's been one of our longer term plays over the last 12 months. It's done amazing things, but we are still waiting for that confirmed breakout there above 132, 133. And if it can do that, then obviously the next Fibonacci levels come into play. Again, another one that I'm not expecting everybody to be on board with, but it's actually one of our current high conviction ideas as well, doing very, very well, going out in new closing highs for this uptrend. So the message that I'll have with our clients this weekend is just let the thing run, and let's see if it can get to kind of that $9 level that we're working with. Cisco, the poster child for the dot-com crash, it's actually very, very close to breaking out above those dot-com levels. If it can do that, then there's obviously solid upside levels to work with there. So I would just be very surprised if it doesn't come onto the radar of a lot of folks if it does break out above these dot-com levels. Amazon, potential buy low opportunity there. I think as long as we're above that kind of 200 level, then I think, you know, there's a fair risk to reward proposition. Obviously decent upside there if those levels can hold up. Freeport McMoran, again going back to the cyclical themes, the copper miners, the silver miners, etc. Freeport McMoran just continues to move through the levels. The target we're actually working with there is up around 100. And we've also got GE Vernova, which again, if you follow me on X, I do post this chart. I have done it frequently over the last couple of years. It's been a monster on multiple occasions. Again, it's one of those stocks that just continues to motor higher. And the target that our clients are working with here is up around 1,000, 1,100, that sort of area. So let's see if that breakout can materialize. Now, if you are still here and you're wondering who it is I am and what it is I do, there is a description, link in the description, so feel free to jump on to our website at honeystocks.com. All of our transparent work is all laid out on our website. I only use my own custom charts and my own data. I can't emphasize that enough. But we provide memberships to all of our premium work, which includes our premium weekend analysis every single weekend, which has all of our best charts and our weekend hot list. It has all of our highest conviction investment ideas. Now, I will show you what that looks like in just a little second. And you'll also have access to our midweek halftime report. Not just that, you also have access to a wonderful, highly intelligent community of professionals, investors and traders from all across the world. You have complete access to all of my ETFs, my chart books, stocks, commodities, updated weekly, all the key levels across all the markets. And if you are someone who is maybe new to technical analysis, process building, etc., I also provide access to our complete technical analysis program, which I'm told is exceptionally well built out, and it does help to provide a really good grounding for a lot of beginners. But just to kind of show you what our highest conviction ideas look like, Netflix, this is the alert that went out this week for Netflix. As you can see, I like to keep my charts very clean with very clear instructions on the chart, etc. So yeah, Netflix, that's the one that went out for Texas Pacific Land Corp. I did say earlier in the analysis that the deep value levels, this is a great example of it. It's probably the best example actually. The 50-month moving average, and lo and behold, big base breakout, and it's just been unbelievable. AMD was a recent swing trade idea. It's not just longer term investment ideas. I do put out technical swing trades as well, range bound charts, etc. Cipher mining, again, one of those range bound charts. ConocoPhillips, again, it's working very well for us at the moment. Very low volatility in the current environment. Nvidia, big gainer last year as well. But I am very unique in what I do, very transparent. I publish on our website, and I have done for the last 8-9 years. Every single high conviction idea that I have ever put out to our clients is all logged on our website for complete transparency. These are the ideas that I've put out so far in 2026, but 2025, what I would urge you to do is to go in and have a look at the types of stocks that I am recommending and make sure that they align with the types of stocks that you like to buy. I'm not someone who's recommending pump and dumps. I don't have any affiliation with any shady brokers or anything like that. So yeah, just make sure that the types of names that I recommend are the types of stocks that you like to buy. Scrutinize it, make sure it fits and aligns with your own process. Like I said, I've done this now for 8-9 years. I don't know many folks that do that, but I think generally, my work is a good fit if you have a mid-term approach, if you're looking weeks to months out. I think if you keep getting shaken out by market news, if you keep getting into the wrong sectors at the wrong time, if you keep missing tradable market bottoms or when to get defensive, if you're confused by all the different analyst opinions, if you're too busy with work, life, family, business, etc. Maybe you just want to be part of a successful community and you want to have access to a tier 1 analyst, then maybe my work is a good fit for you as well. But I think if you have stuck around here to the bitter end, jump onto the website, take a little look around. Like I said, there's a link in the description, and hopefully I can welcome you to my world soon. But whatever you're up to this month, please do have a good one, and I'll be back in your inboxes next month. Thanks as always.